Welcome, everyone. I'm Jamie Lust. I am a managing partner at several venture capital firms that we're focused on healthcare. Actually, one of our portfolio companies is a member here at Matter. Um, we use HiveBridge for all of our portfolio companies, and Dave can provide more detail on that, on their offering. But going back several years ago, I was a co-founder for a health tech startup, and I wasted a lot of brain cells and banged my head against the wall trying to figure everything out from finance and accounting, equity management. I had to deal with figuring out what we needed for HIPAA and SOC 2 and lawyers and HR, all that stuff. And it was a massive distraction and ended up costing us a lot of money. Now, fortunately for us, we found HiveBridge, and Dave has been a critical partner in us in helping us, our companies, not only correct some of the mistakes we'd made, but keep them on the right path. So with that, I will turn it over to Dave Hanna.
Oh, well, thank you, Jamie, and thanks everybody for taking a little time out of your day. Talking about accounting isn't everything everybody loves to do in the middle of a Wednesday, but we'll keep this contained within the hour. We're going to touch on a lot of different items, but just give you a real quick bit of background on myself. Used to be a CPA, left all my hair in that industry, and I was actually a mascot in college. It was my alter ego as an accountant, which then lended me the ability to leave public accounting and went and started a business from scratch. And in between that gap, put together a hotel management company, which is a little bit of what HiveBridge is, effectively taking care of the back office for multiple owners, multiple properties, and started up a software as a service company reseller for payroll, timekeeping, and HR. The UKG Ready platform, grew that over 14 years, sold that a couple years ago, 2.5, and ended up connecting with Jamie again from years gone by. And it's worked out really well for HiveBridge and all of us. So I bring all of that background here to talk to you in a way that I hope you don't find boring, because it doesn't need to be. But you do need to understand parts of this as you go through your journey as an entrepreneur. So with that, our agenda is going to be the foundational part of finance and accounting. We're going to run this at about 10,000 feet. We're not going to get into the weeds, try not to. It's against my nature to not get in the weeds. So Jamie will drag me out of there if I get in the weeds. We're going to talk about at each stage of your company as you grow it. What do you need to be doing and when? What software do you need to use? What tools, services? So the second and third item in this agenda will blend together a little bit. And then we're going to wrap it up with mistakes that I've seen, that Jamie's seen, and some different ideas on how to help you be successful, no matter how you put together your back office. Hopefully, you're going to walk away from this with some nice tools. I personally, I get a big kick out of the way we got the software side put together. So you'll see that in just a few minutes. So that's what we're going to go through. But I have a big question I want to ask you first. Of these areas that are on your screen right now, core basic accounting books and records, the financial statements, financial metrics, where you get all geeky and you calculate ratios, trend analysis, cash management, or stakeholder management, shareholder management, whatever you'd like to call it, and valuation. Please note in the chat area which of these areas cause you to lose sleep, or you see this on your screen and you think, wow, I'd really like to dig in a little bit on one of these topics. Please just make a note there and we'll pick that up in a minute. And then also I want to lay down for you, looks like there's somebody that threw down a little bookkeeping, books and records, and we'll keep an eye on that. So please do make note of those 5 topic areas. If there's anything you'd like me to dig into more. There's going to be time for Q&A coming up as well. And at any point while we're rifling through this, please throw some notes in the chat, and Jamie will reel me back in and we'll go back and address your questions on the fly too.
Yeah.
And feel free to unmute yourself, just barge in. If we had beer, I'd pass it around to you right now, but it is the middle of a Wednesday. So
Tuesday.
we're not going to go there. Tuesday is Tuesday. I don't even know what day it is. All right. So let's talk a little bit about the journey you're all on. And I've walked through different stages of this myself. I've seen the accounting end of it, and I've seen the emotional challenges and work difficulties that reside in every one of these stages. So you've got the pre-seed where, and I'm curious where you're at now on these as you kind of read through them and how they're categorized. Pre-seed, you don't have any revenue, probably playing a little credit card roulette, and this might be your second job because you're working a primary job to save up a little money to chase your passion, which is the company you're trying to grow. But once you realize you've got a proof of concept and you think, wow, I think this is really going to work, I need to either raise some money or go borrow money. So this is where the seed raise comes in, and you're going to sell off part of the company to raise a little money. So you're going to probably about to be starting to generate some revenue, might have an employee or two. This is stereotypically what you would see at these stages. Anybody that owns part of you at the seed raise rounds is usually a pretty informal stakeholder or shareholder. But then once you raise a little seed money, things are going to get a little more serious, and you're going to be earning revenue or sales, whatever you'd like to call it. You might have a few more employees, and whoever owns your company besides yourself is probably going to start taking you more seriously, going, holy cow, I think they're going to make this thing work. You might be starting to get cash flow positive, and you're going to be required to provide better communication to your shareholders. But then you realize, wow, we've lost money, but we've built our revenue. We're almost going to be profitable. Let's take this up to the next level. So now you're going to go to Series A. Now the venture capitalists, the private equity groups, they're going to show up and they're going to decide whether or not to invest money, not just in your company, but you. And so this is when you've really got to step up and get into your A game on finance and accounting, because they're going to be asking you for data you didn't know could even exist. So that's kind of those stages. The correlation, when I was putting this together and talked to Jamie, I threw out, I go, it's a little bit like baseball or maybe even soccer. You're a kid, you start out with the young kids, you're 6, 7 years old, you're not really keeping score, you're goofing around, having fun on the field. But then all of a sudden you start keeping score, then you get into high school, college, professional ranks. This whole process is halfway similar. And so I'm curious if you can throw in the chat area, which of these stages are you currently in? Or the stage that you're currently in with your group. I'm curious because then that's going to orient some of the comments that I'll be making here in a little bit. So feel free to just slap in comments, punctuation, casing, doesn't matter. Looks like we've got a few pre-seeds in there. And so we'll let a couple of those accumulate in there. Jamie, anything you want to add before we shift gears beyond laying down?
No, I think just reminding everyone as you jump in, I think Dave's going to fly through some of this stuff pretty quick. But if you have questions, we can focus on some of these areas a little bit more, especially for those. It looks like we have more pre-seed and seed. But don't hesitate to ask questions either on the chat or come off mute.
Yeah, sounds good.
Oops, sorry.
Whoa.
Going the wrong way.
Forward, going backwards. It's a little bit like being in business, Jamie. 3 steps forward, 2 back. All right. So the foundational part of finance and accounting, and you think, all right, your educational backgrounds, most all of you, you're touching on within the healthcare industry. I flunked chemistry in high school. I always did really well in math, but I was awful with biology and chemistry. And so I know nothing on the medical fields, almost nothing. And I know nothing about writing software, but I know a lot about using it. And so on the accounting side, if you think, all right, I'm going to have to deal with people wanting to invest in me, what do I need to provide them? Well, in order to get good accounting records, financial statements that we're going to go to, you need a foundation underneath those. And this is your books and records. These are receipts, these are invoices, that's the paper, the PDF files, all of those things, your bank statements of where did you spend money and who did you get money from? And what are the proving documents that show those amounts? And so these are important because they're the foundation from which your financial statements will go forward. And if the IRS ever comes knocking and says, hey, can you prove to me that you really spent that money for your business? And do you have a receipt or an invoice that shows you paid that? Well, yes, I do. right here's my PDF. In today's world, with character recognition capabilities, scanning all of your invoices or paper documents, I can't stress that enough to do those things because then they become very easily searchable, as you all well know. The compliance side is important and as well to help mitigate risk of fraud. And that becomes more important as you get bigger in your operations. So then after this, after your books and records, that data rolls up and becomes the underlying numbers that get rolled together and categorized to create your financial statements. So if you watch any business news or read any business news, you've heard of 10Ks, 10-K. It's a Securities and Exchange Commission report that reports the annual results of operations for a publicly traded company. That includes financial statements, balance sheet, income statement, statement of cash flows. So those financial statements, as annoyed as you might get with your accounting and finance stuff, they are the foundation from which all capital markets go forward. There's audits that come in behind those. As you get bigger, you might be required to have somebody come and look at your financial statements to make sure they're fairly stated. So when I say they are the foundation, they are the foundation from which so much of your measuring and your metrics go forward with. But they're important, as I somewhat just said, the decision-making process. You get to analyze, you can look at trends, you can calculate different ratios from these that we're going to get into in the next step. The transparency and accountability, where you can say, here's my balance sheet, which shows what you own, what you owe, and what's left. That's the equity. So that's that part. Then, once those financial statements are complete, then you can take that data and create financial metrics. So you can use the financial statements, you can add more data that comes in, maybe from your CRM system, customer resource management software, or your ARR roll forward that you see on the screen. What is it for financial metrics? Being a software as a service company, the ARR roll forward schedule will become anything and everything you do going forward. And so that it stands for annual recurring revenue. So your monthly recurring revenue, if I sell 10 subscriptions to people to my software at $10 each, that's $100 for that month. But if I take that $100 times 12, that's $1,200. That is my annual recurring revenue. So that's what that means. Your burn metrics, how much money are you losing every month? Because so many times in your line of work, money is lost on a monthly basis because you're not generating revenue, or you're starting to, but you're spending a lot of money to get that revenue. And I can go on for days on metrics. The GTM, what I noted on this slide, is go to market. How much are you spending to take your product to the marketplace, and what are you getting in return? That's sales/CAC. That's customer acquisition costs. So if I spend $2 in marketing costs and I get one customer that's worth $1 in revenue, then I spent $2 to get $1. That means my CAC ratio is 2, or 2 to 1. And then there's all kinds of benchmarks and things like that. This comes into play as you go to raise money to look at what your metrics are, what you project them to be. I think we had a question pop up in there, Jamie.
Are business credit card statements sufficient over PDF receipts?
Depends on the magnitude of what you've spent. Generally speaking, the IRS has gotten more lax on that on audits. But what they will ask you to do is prove that those expenses were used, or that money you spent, that the product or service was truly used in the business. If the item is under $75, invoices and receipts aren't a big deal, but you should make good notes of what the money was spent on.
Yeah, and Dave, would you say it's more important, especially if you're at a seed or kind of that earlier round? It's
Yeah.
good hygiene to start capturing this, but I'd say it's not end of the world if you have it. What are your thoughts on just how much focus on it? Or
I wouldn't lose a ton of sleep over it. If most of the items are under $100, I wouldn't even think twice about it. If we got $100 or more, I'd take pictures, take the picture of a receipt or an invoice that way. There's a piece of software called Ramp at ramp.com, ramp.com, that is spend management software where you can actually get a credit card through them free. They make their money on the credit card fees from the merchant fees. So they do offer a free version of that software. The cool part about their mobile app is you can capture invoices and receipts freakishly easy. Some of them, one client I work with, they absolutely hate keeping track of receipts. I had to start hounding them because they were starting to get to be a real size business. And they moved their spend management over to Ramp. And even the CEO said, I don't hate this anymore. Ramp made it so easy for him to capture things with his phone. So that might be a good idea to help you out there. Next step of the foundational parts, cash management. What are you managing? Well, for any business, you're going to have cash coming in, you're going to have cash going out. Cash coming in will come in by way of sales or revenue or income. Those terms are used synonymously a lot. And cash going out to pay for expenses. Or you might have cash coming in for people that invested in your company or bought shares in your company. But you need to keep track of that, of who gave you the cash, what they give it to you for. And so you need to be able to monitor what cash comes in when and what cash goes out when. So there's, I think I made a note in here, and using in the top bullet point, using cash to ensure you can cover expenses, optimize investments. In today's world, if you have excess cash on your books, you better be earning some interest income out of it. In today's world, you should be earning at least 4% on unused cash in your business, at least 4. Those might be coming down, hopefully, if interest rates start to trend down. But managing that excess cash is important. You can use that cash to prepay items. For instance, some softwares or tools that you use to host your applications. Yeah, I was going to start rattling off hosting companies, but they will take 1 year's worth of payment and save you 20%. So if you have the cash, you might want to consider doing things like that, but you don't know how much cash you're going to need each month if you don't manage it well. So you don't want to get the cart in front of the horse and prepay it, a whole bunch of things, and then you don't have any cash to make your payroll. So another foundational part is the stakeholder management and your valuation. Most software as a service companies are bootstrapped and go into seed money and then go into private equity VC money. During that process, you need to know who owns what part of you and what are their ownership rights. That's often referred to as cap table management or equity table management. And then if you're granting options to key employees or you have an option pool, the 409A valuation, that's a reference to an IRS code section, is critical to one, managing the income reporting requirements to the individuals that get those options, as well as making sure that information is reported to the IRS for who got what granted when, what their exercise price is, what the valuation was at the point in which those options were granted. There's all kinds of nerdy stuff that goes around that. But the valuation and stakeholder management becomes really important when you're approaching seed round and past seed round. That last comment there, dilution, I think that came from Jamie. And so if you think about it as you go along, you have your idea of what you want to do. Some of you are in your seed round or after your seed round or getting close to it, but you're going to sell off part of your company to get that cash. And they think, okay, well, that's good. Now I can live another couple years or another year. Well, then you realize, shoot, we burned through that cash pretty quick, but we still hold some promise. I'm going to go sell some more of my company. Well, now you just diluted yourself again and your other shareholders. Well, then you go for the round A. Now you're going to dilute it even further. And so you need to be mindful of that and make sure you plan it well. Because you can get to that round A part. For me personally, the business that I sold, there are a couple things I wish I could have done over in regard to that, because I gave up too much too early that I could have got back later. But that was in 2013 and nobody loaned me a dime at the time, even though we were just barely starting to make money.
Yeah, and Dave, I'll just kind of jump in with some of our experience.
Please do.
We've had, I think from having done it wrong in previous examples, where we didn't have all of these items, these foundational items in place, we didn't have a good sense of cash flow. We got into positions where we were forced to do a raise, and as a result, we were taking terms that weren't weren't favorable to us. So as a result, we got massively diluted, and it ended up not really working out very well. And we were not only diluted, but there were terms that the investors at that point had put on us that just became insurmountable. So it's really important that you get these things right away, because having that visibility and being able to plan as you go forward makes you be able to handle things in a proactive manner that will be more beneficial to you as a founder, or an owner in a firm.
Oh, that's yeah, that's a little bit paralleled with the situation I had. I'll spend a minute on this because even if you're pre-seed or close or just past your seed round, this gets really important where you think, what do you want out of the business? Because you think, all right, I'm going to sell a part of my business, part of your blood, sweat, tears, you've poured your whole soul into this thing, and you don't want to give it up easily. And the business that I'd started and sold, started it in 2008 of all years, when the economy, I mean, there was the Great Recession in '08. And I thought, wow, this is great. Just cashed in everything I ever saved and put it into this business. And now I get hit with that. But I had an option to buy out my silent money partners at the time to pay them double what they invested within 5 years of when we started. Well, in 2012, we weren't making any money. We were about ready to start making money in 2013, but I only put a 5-year window on that. If I would have been thinking, I would have renegotiated that at that point, because when we sold in 2021, what I didn't exercise my right to buy that back then, or maybe even pay them 3 times. Had I paid my silent money owners 3 times their money of what they originally invested, that would have yielded me about, it was worth a couple $1 million actually on the back end of selling the business, that I gave up because I didn't renegotiate it. I don't know if I would have got it done or not, but I can't stress the importance of thinking through that as best you can and thinking about it every couple months and where you're at on the business and what the forward prognosis looks like. All right. Anything else you want to throw on that, Jamie, before we start getting into what do you need? You good?
No, I think
All right.
let's get into that.
And I checked in with Raphael, I hope I pronounced that correctly, to make sure that I answered that credit card question correctly or the way you wanted, but feel free to fire back if you'd like. So now what do you need? We've talked about what is the startup journey. You all kind of have a good idea what that is. And then what do I need? When do I need it? When it revolves around accounting and finance. So if you're pre-seed, keep it simple, stupid. One of the best acronyms I ever learned a long time ago. And at that stage, you don't need to be fancy. Know what you spent money on and where you spent it and why. And don't commingle your funds, your business and your personal. I can't encourage you enough to keep them separate. Don't overthink it. But do pay attention just a half hour a week. Just go spend that 30 minutes a week and you'll be very happy you did another day, because you're going to know how much you're spending and you're going to think, I don't really need to spend that yet. I'm going to wait. And so at this stage, like I wrote in there, close enough works. And
Yeah,
it's hard for an accountant to admit that.
and the other thing I'd highlight here, you don't need to be worried about as much of the other elements, the foundational elements, because you're not there yet. So a lot of people will read about, oh, these metrics I need to have for this. They're irrelevant because you likely don't have the revenue yet. So don't sweat on those things yet. You'll have plenty of time to worry about them as you start to grow.
Yeah, very, very true. So then on the financial statement side, the cash management side, those come in when you're approaching seed raise and in the middle of it, because you're going to be doing, as I call them, dog and pony shows, asking people, you're going to be pitching your wares. You know, it's a glorified version of Shark Tank. So what you're going to be going through if you haven't already. People are going to be asking you questions you didn't know could be a question about your business, and you're going to have to be ready to answer them. So you're going to need to be able to put together basic financial statements And you're going to need to have the cash management tools in place of where's your money coming in from if you are generating revenue at this time. Is it through Stripe processing credit cards on subscriptions, or you get it collecting via ACH? Who has control of that? And so business banking, Mercury, we love to use at HiveBridge. They've got a lot of basic tools that are free. In fact, they're actually pretty darn good and they keep getting better. It's a wonderful banking resource. QuickBooks Online works well and actually scales reasonably well. Most accountants hate it for different reasons, but so many of the other accounting applications require somebody with a real accounting background to use them. QuickBooks Online can be used by people that don't have a deep formal accounting education. And if you do have any employees, I cannot emphasize this enough, don't do your own payroll. You want to get in trouble with the IRS, just goof up your payroll taxes. I would recommend Rippling because that scales as you grow. Gusto will get you by for a while, but once you get past 5 to 10 employees, you're going to wish you had something else. Then post-seed and when you're generating revenue, this is where you got to start taking care of that cap table, your equity table, of knowing who owns what part of you and what are their rights of ownership, and then your option packages if you have any at that time. So your ownership group is going to be getting more serious. Your financial statement game is going to have to be better. You're going to have to be reporting to them regularly of what's been going on and where you're going, and any initiatives you worked on, what were the results of those, and if they didn't work out very well, say any new go-to-market strategies, then what are you going to do to course correct? All of those things you're going to need to be able to document and provide good, at least verbal insight to your ownership group. So as far as on the accounting side, you probably don't really need full-time in-house accounting. I would strongly encourage you to outsource it at this point for most companies. Because it can just be overkill and you'll lose focus if you make a bad hire. If you want to worry about hiring well, hire slowly, fire quickly under that adage, keep that in your wheelhouse, in your development side, things that you know well. Don't go and try and hire people for positions where you don't know how to do that position already. Those are the things that it's my personal general rule to outsource that stuff. Jamie, anything to throw on top of that?
Yeah, I would say this was an area where probably even in that earlier stage, I spent a lot of time trying to figure stuff out, and I had to learn a lot of different things as we were presenting to different potential stakeholders, and they were asking for P&L statements and various questions that they were getting in forecasting. It was challenging because I had to learn it, and it actually was a massive distraction to us. We had to go and stop focusing on the clients and stop focusing on the product and more focus on, how could I articulate this going back? Even the tax, the annual taxes, prepping for that was a distraction. So kind of to Dave's point, we don't do any of it in-house now with any of our portfolio companies. We leverage HiveBridge for it. There's other services that we've looked at out there as well. But I would strongly encourage you, don't do what's not strategic. Yes, your financials are strategic, but doing the things around it are not. So focus. That's what we've learned. It's just focusing on what we need.
Say, Jamie, could you bounce back 2 slides to seed raise? There you go. Oops. Next one, seed raise. There you go. You'll notice in the bullet point, the first one wrote that your forecast will be wrong. So when you start forecasting the results of your operations, everybody's wired a little differently on these things. It's going to be wrong, and it's probably going to be really wrong. The company that I had started, I had projected, and I did this for a living. People used to pay me when I did CPA work to do forecasting work for them. I thought it'd take $200,000 for us to become profitable. But it took $750,000, and I thought it would take 2 years to be profitable. and it took about 5. So I wasn't even close. And so I wrote that your forecast will be wrong, and you might be thinking, well, then why do you even do the forecast? Well, because you got to start somewhere, and your forecasting will get better because one, you're going to have more history to rely on in making your choices that go into your forecasting. How you choose to allocate resources and the results of those resource allocations will become easier for you to predict. It will get better, but don't beat yourself up because those first few are probably going to be not even close. But you're going to have
Yeah.
to be able to argue, not really argue. I say argue in the good way. Present logical arguments as to why you believe in your forecast. And so,
Well, and
yeah,
Dave, just to echo your point, I think what we've found is it's not only helpful and as you progress, why things may not be working as expected or an ideal world. I haven't had this yet, better than our projections.
yeah,
It helps you work through everything from how are you pricing your product?
mhm,
What am I going to need from staffing? Starting to think through the assumptions that go into those models. It's not about being right. It's about putting that thought process into it, and it drives a lot of your business. So we
yeah,
spend a lot of time with our portfolio companies going through that in detail. And we find that by the time we get further around, our projections are much more accurate. You get much more visibility and you start to use it more to drive the business. But in those early days, it's really helping you refine your business model.
yeah, yeah. That pricing model and billing model. Um, yeah, that's where you really start to know what you've done right and wrong very quickly. But no, thanks for going back there. So then once you get past the post seed round, your late seed, thinking about schedule A, you're going to end up with due diligence like you hadn't experienced yet. And when I say due diligence, that's the private equity groups, VC groups sending in 2 people that fly in and they spend 2 days and take you completely away from your regular days and ask you questions, um, grill you. They ask you for reports. They make you dig up data for them to prove that what you're trying to sell them is a good deal for them and is a good investment for them, and that you have the capability and the team to build a good return for them. That's what I mean by due diligence. That can take hours, days, and months. You're going to deal with legal teams. You're going to spend a lot of money on legal that you wish you didn't have to, but you do if you want to get to that part of the game.
Yeah, and I'll just speak from
Go ahead.
experience on
Yeah.
this is again, when done poorly, it was months, it was distractions, it lowered the valuation we were getting because we had missing pieces. We couldn't articulate it well or find the contracts, the terms. The accounting wasn't clear. There were some gaps in it. If I could turn back the time there and have just been more organized early on, do the steps that Dave has outlined here, it would have not only saved us a headache, but it would have gotten us a much better valuation.
Yeah. No, very true. When somebody doing the due diligence says, "Hey, do you have an ARR roll forward table? And can you isolate your expansion and contraction? And can we do some cohort analysis on it to see who your biggest expansion customers are on a trailing 12-month basis?" Something like that. And if you can produce that with reasonably quick and being accurate, you'll end up where Jamie was wishing he would have been on that particular company, or you'll be that much closer to it. So this is where you need real deep professional help, either fractional controller, CFO. Maybe you've got a full-time staff accountant on staff all the time. But there's a lot of ways to allocate accounting and finance duties today with the tools that are out there. And when I first started in accounting, and it was spreadsheets, it was real software, it was tractor feed paper and printers, things like that. You needed people on staff all day, every day. But with the data integrations through spend management software with workflow approvals, you can automate a lot of the accounting work to where you don't need as big of a staff today as you did 20 years ago. But you do need the output from those efforts. So now let's dive into what the solutions are that are available. So we talked about the foundation of the accounting, the receipts, the records that go into it, create financial statements, and then at what stage of the game do you need those different levels of service and functionality in your accounting and finance group? Well, now can talk about what software is going to be available. And when this is where we get into the spreadsheets that I kind of get a kick out of that we put together. And there's pretty good value on what's behind this slide. So before we rip into that, we got about 20 minutes left, 22. And so I'm not seeing any questions come in. So if anybody feels like well, wait, let's see. So there's,
Raphael, can consulting or
yeah,
services business be sold, and how are they valued?
yeah,
Um, I'll
go ahead.
Yeah. So one of our portfolio companies is a consulting firm, and they absolutely can be sold. You'll want to be thinking about who the potential strategic buyer is. The one thing I'll tell you, the multiples for service companies are significantly lower than if you're in software or even device. So it's just understanding the market, start thinking through who your strategic buyers might be, but they can absolutely be sold. And Dave, you have firsthand experience of going through that with
Yeah.
your firm.
Yeah, the business that I sold, we were reselling software as a service. We didn't build it, write the code. We bought it wholesale and resold it, and we laid service over the top of that. And that particular company we sold it for is about 2.5 times revenue. When a software company, if you own the code, at that point in time, that was the end of 2021, would have been selling for probably around 8, 9, 10 times revenue versus 2.5 that we got. And so the short answer is yes, but one thing to look at with that, Raphael or anybody else looking at that question, is how you do your billing. And I've always railed on CPAs, even though I am one, and how they bill for their consulting and service related stuff. They just bill on a project basis and bill by the hour, which can work okay. But if you can get it structured to where you have a recurring revenue component, you have people locked in on a contract where, as a for instance, instead of somebody spending $3,000 a year to get their corporate tax return done for a business, for a pretty heavy return, I personally think a CPA firm should charge that business $4,000 a year and then include 3 meetings off season outside of tax season to see how they're doing for the year and what tax questions they have, and then bill them 350 to $400 a month during the year. So now you smoothed out the bill to them. It doesn't feel like it's $4,000 all at once. And you're adding in an element of service. And if you get it structured like that, you might be able to get a slightly better multiple than if you did traditional billing by the hour. Oh, sorry, bit of a long-winded question. Jamie's job was to reel me in when I take off on a nerd rant.
I failed. Hopefully that answered your question, Raphael. Any other questions?
But all right.
I have a consulting firm from Sandra. I have a consulting firm, and I am developing 2 SaaS companies, one for employees and one for enterprise.
Yeah.
Yeah, I will tell you, focus on the SaaS.
Yeah.
That's where you'll get the value.
Yeah. Yeah. Because SaaS scales, consulting scales based on humans, SaaS scales based on chips and hardware.
Yeah.
And that's why the multiples, I mean, they're just better. If depending on the underlying model, can do that. So
Yeah, and I'll tell you, and I won't derail this. And Sandra, you can reach out to me afterwards. It sounds like you're in the B2B space. That is a much easier sell. Once you go in that B2C, it's just a whole different realm. Even from all this, the accounting finance space, your transaction volume, everything else goes up. So as you think about your business model and how your revenue is coming in, going back to the finances and understanding that will also be important, because you're gonna want to account for that with your growth.
yeah.
All right,
All right.
Dave, I'm gonna get you back on track, back to the
All right.
tools.
Sure. With HiveBridge, we're always searching, looking for a better mousetrap. We've got our core group of applications, our tech stack, so to say, that we really like in today's world. But we know that in a year, 2 years, there might be something better. And then the question is it worth it to move? And what's it going to cost to move? So, and Greg, I'll jump back to that question here in just a moment. We're going to be rifling through that area. Jamie's already in front of it. Geez, I should just stop talking. But all right. Let me close this window here. So you need to look at the future needs. So for instance, a business that I sold, payroll timekeeping software. When we first showed up on the scenes with the ability for an employee to look on their phone and see their pay stub in 2010, we had that. It was like showing people fire for the first time. Customers like, holy cow, I got to have this. This is great. Well, now if you don't have it, you've got serious problems. You're going to have employees going, geez, why don't we just use a stone tablet and chisel? But that's what I mean. As you all know, it changes fast, but you got to be able to shift and move. So using a group like HiveBridge or HiveBridge gives you that flexibility because then that burden of always shopping is on that service provider. And you only have to buy what you need versus going and overpaying and only using parts of what you're really paying for. So let's get into the software and what we're using. So on the banking side, we love Mercury, but here's a few others on the screen. And we illustrated in the pre-seed seed raise across the top of at what stage of the game these different options are viable, in our opinion. Down at the bottom, the last one, that large commercial, say JP Morgan, Bank of America, UBS, Goldman Sachs, whoever. But all the large institutional banks like that have venture capital arms, they have private equity arms, they have people that will take you public arms. When you're getting into that Series A, you're going to need some of those relationships. And so that's why that's listed out there in the Series A and beyond. But in case you're wondering what that was doing in there. Next up, and you'll notice anything that's rectangular in the black line, that's what we use at HiveBridge. So we're deep into QuickBooks, but there are other options. QuickBooks is annoying to me as a true blue accountant, but the darn thing scales reasonably well. And they've got a lot of integrations that work really well with other platforms, for instance, Ramp for spend management. But you've got Oracle and Sage. Xero, it's built down with the Aussies in Australia, and I love Australia, but the system logic in Xero personally kind of freaks me out a little bit. Some people love it though. FreshBooks is all right, but we're sticking with QuickBooks for now.
Well, and I think the other thing is depending where you are in there, you don't even have to go to QuickBooks. Just keeping things organized in a spreadsheet and structured, because yeah, you're if you don't have a ton of revenue, just keep your expenses organized. Save yourself some time when it comes to the working with your tax accountant by having things organized. But you can do that at early stage. The sooner you can move to something with a true general ledger and have that structure to it, it will make your life better later. But you don't have to jump to something right away.
Yeah, that's correct. And the NetSuite and Sages of the world, they almost take somebody with a deep accounting background to operate them. They're not near as user-friendly as QuickBooks or Xero or FreshBooks. So then on the CRM, customer resource management, when you're pre-revenue or just barely, or if maybe you're a large contract B2B and you only have a few customers, spreadsheet's still fine. But HubSpot, boy, I've been in and around it, used it in the business that I sold. It's solid. Salesforce can be really good, but it can get really deep and complicated. But that's why we would push that out into Series A and beyond, unless you happen to be a Salesforce guru already. There's a couple others there. Zoho, that's, I believe, fractioned off that 39 Signals group that own part of that. That's actually not too bad. Pipedrive is pretty decent. They're starting to dig into a little bit of HubSpot's market share, but I've never used it.
So Dave, why do you have CRM when we're talking about finance and accounting?
Well, because on those key operating metrics, I'm glad you asked that because I was forgetting to say it. And so those key operating metrics are the financial analysis that you need to do to be able to communicate to your board. You're going to need those statistics of what your close rate is, so what your marketing and your marketing qualified leads that become sales qualified leads that become closed deals. What's your closure rate? How are you going to do your cohort analysis? Where's your business coming from? What's your lead gen? Where your leads being generated from? That's what your good CRM is going to be able to tell you.
Hey, Dave, we got a question. Raphael is on zero
Sure.
now. It's difficult. Is waiting to start the new year best for changing or clearing reports?
Oh, as far as on accounting, changing out accounting software?
Yeah.
Yeah. Um, Not necessarily. I would do it at a month end at a minimum. But if waiting till this particular year end in a couple years and or excuse me, a couple months to get to this calendar year end, I'd wait if you only have a couple months to wait, if you can stomach it. But before you switch off an accounting software, make sure you can pull a fully detailed transaction detail to a CSV file. And I'd save that in a couple of spots because you're probably going to need to write some pivot tables off that and a trial balance to move to your new software.
Yeah,
But
I
month
can
can work fine.
I can just tell you the experience that we had in migrating. Dave was instrumental in helping us migrate one of our legacy firms off of we were using the founder was using a friend who did his personal accounting to do his, and it was just completely botched. It was a nightmare. And then to migrate off their software and get it into QuickBooks was a bit of a challenge, because getting that data out wasn't good. But boy, once we got through it, life was a heck of a lot better.
Yeah. No,
Um, Greg, we're going to talk. I think he's going to talk about cap tables in a second.
yeah. Yeah. Real quick to put a little on top of what Jamie just said. Using QuickBooks when I was back doing CPA work and doing tax returns. Small business client would come in and go, "Hey, here's my QuickBooks." They'd give you a disc at that point in time. And you'd go look at it and you'd realize, what is this number? And it wasn't even close. So the short moral of that story is if you're going to use QuickBooks and you're going to do some of it yourself, make sure you know how to use the tool. That's like turning me loose with a pneumatic nail gun and trying to build a house. I'd be awful at it because I have no clue how to use a pneumatic nail gun. But know how to use the tool. Otherwise, you're going to end up with some really bad results, like Jamie mentioned.
I can attest to that. I completely botched it. QuickBooks seemed very easy to use, and it was great, but I was not an accountant, and it required a lot of rework.
Yeah. All right. So let's see. All right, cap tables. We're going to be there in just a moment, Greg. But on the payroll side, I'd already mentioned a little bit. Rippling. Paycom has decent software, but that's usually for bigger groups. Zenefits, they've ran into a few issues. They become a agent of record for your employee benefits. They come up a lot, but that's why they showed up on this list. Not so sure I'd go there. Workday, it's powerful stuff, but it's for great big companies. Local regional boutique provider, that's what I did. And there are some really good ones out there at good prices that have really good white labeled software behind them. So if you know one, you like them, and they'll scale well, go ahead. But if not, I'd use Rippling all day, every day in today's world. So, and then next up, oh, here we go, Greg, on the equity management. Quick question to Adam. Yes, the slides are going to become available. And so on the equity or cap table management, we use Pulley at HiveBridge. I've used Carta, is really good. They've been the kind of the gold standard with that for a long time, but they are also quite a bit more expensive. Pulley is less expensive and can do, I haven't seen it not be able to do anything that Carta can't. Jamie, have you?
Mm-mm.
You've dealt
I
with it?
actually like the interface better too.
Yeah. Yeah. So Pulley is a great option as well. But yeah, a spreadsheet's okay for a little while, but if you realize that, wow, this is getting a little unwieldy, it can't stress to move to pulley or something like that quickly. Because you do not want to mess in your cap table. If you want to lose the trust of your investors, goof that up for them.
Well, and a lot of these tools will also enable you to share documents,
Yeah.
communicate with your shareholders. It streamlines the process. Not only does it help you kind of keep track of everything, but there's a lot of other services that they provide.
Yeah. No, they absolutely do. And so, and a couple quick pitfalls, mistakes. One of the biggest ones I've ever seen, and I see it a lot, is mixing personal and business finances early on. It can lead to tax issues, confusion on the accounting side. I mean, it gets really bad. It can create legal issues. If you want to lose the protection of your limited liability company or LLC or corporation, whatever you've set up, commingle funds and don't treat the business as a separate standalone entity. Um, and yeah, we've all read about it. Piercing the corporate veil can happen. The other part, not keeping financial records at all, not giving two hoots about those receipts, the invoices, or even the credit card statements. You just don't have them. Bad idea, really bad idea. You can recover from these things, but some of them can be really expensive to recover from. The middle one, underestimating the burn badly. I did that. Got through it. I ended up having to play credit card roulette where I had 5 different credit cards at one time, totaling over 100 grand, and that was owed on them. Kept getting a 0% interest card, load that one up, pay off the other one. Looked at selling my house, sold a car to get a cheaper one. But yeah, that's what happens when you underestimate the burn. I had to make calls to silent investors and say, hey, we got payroll this Friday and it's Tuesday. And how much do you need? Well, we need about 8 grand to cover it. How much you got? Well, I only have about 1,500 bucks. Okay, well, I'll have a check for you. Thankfully, I had some very patient and understanding silent investors. Um, but that overly optimistic projections, if you do that once or twice, that's one thing. But if you keep doing it over and over, you're going to start to lose the trust of your investors. And when you really need to go raise that money again, you're going to struggle to raise it, or you're going to give up a lot of equity to do it. And those consequences, going broke is no joke. Not to start rhyming at the end of the presentation. But all right. And Jamie, anything to throw on top of that? Because that's yeah.
No, I think you hit it.
All right. Then do it yourself accounting, post seed money. Bad idea. Tempting as it is, you're wanting to save some money. Do not be penny wise and pound foolish. If you don't know what's meant by that, you have to talk to my grandma. But I think you'll get it. And make sure your service providers, the people you confide in and that you trust, understand your business. There's a lot of CPAs out there that can provide some pretty good business, but they don't know the first thing about software as a service. They don't know what an annual recurring revenue roll forward table is. All those core basics. But doing it yourself is almost always a bad idea. Do what you're best at, outsource what you're not, and go make the most on what you know really well.
Greg asks, should we be filing losses to the IRS each year before profit?
Well, you get capital loss carry forwards, kind of that can get into a pretty deep question on that. But the general rule is, yeah, if you've lost money to this point and you think, well, why am I even going to file that? You should, because if you start making money later, you can take the benefit of that loss later. You can deduct that loss against future income. So you can carry forward past losses.
Dave, we have 3 minutes left.
Yeah.
Time check.
All right. Thank you. A little bit out of Mark Twain. So you think, boy, I should probably start digging into this. There's no better time than now. It's the best way to get ahead. So consistent work habits, just carve out that little bit of time. Maybe it's when you're decompressing at the end of the day and you're sitting there with your laptop and you're sitting in a lazy boy and you turn on some mindless TV. Take 30 minutes a day and do that. Start reading. There's a blog post called the SaaSCFO.com, cfo.com. They have some wonderful stuff on there. And there's a bunch of others that provide great content too. Find great advisors early, an attorney, an accountant, tax professional. Buy them lunch, get to know them well, establish those relationships. They'll pay great dividends later. And provide regular updates to your owners. They need to know what's going on. If they wrote you a big check, they wrote it because they trust you. Make them keep trusting you by communicating well. And the systems that you choose, the processes that you choose, don't be too quick with it. Sit back, take your time, and make sure they're going to be scalable, efficient, and accurate.
So
Can't set enough on the scalable side.
Greg asked the question, any AI tools for the future you foresee getting on top of now? I'll give my quick perspective because Dave, you guys have been sharing some of the stuff. All of these providers, that's why I think it's important. We like working with HiveBridge because they will swap us out of solutions. A lot of them are incorporating it, and this is why it's getting easier and easier to do, and things seem to be getting more efficient. So I think the big players that are out there that we kind of went through are already all starting to incorporate it, but I don't know if there's any others you see out there, Dave, that are.
No, there's actually one tax engine one, income taxes. You can ask it any tax question for US based tax. Things currently running 95% accurate on machine learning. As in, if I have this much of this income, this much of that income, and a long-term capital gain, what's my effective annual or tax capital gains tax rate? It'll answer those things correctly, which is amazing to me. So, quick slide, a little unashamed touting of HiveBridge and what we do. But we have the finance and accounting that we've been talking about, the HR side. We have HR compliance related policy procedures. And then on the government risk and compliance, we didn't even talk about, but the various HIPAA, SOX audits, certifications, and attestations. We've got a group that can help our clients out with that. That stuff you don't want me doing. I don't know a thing about it. We've got a great guy named Alex that does a lot of that work for us. And then on the HR side, we've got a guy named Luke over on that side. And Jamie's gotten to know them all well. And so.
Why don't we jump to the
there's my contact information there. Throw me an email. I'll gladly throw back my phone number. I love helping people be successful. It's really fun to see people taking an idea and seeing it turn into revenue and turn into good wealth builders, let alone good solution providers for their customers. So thank you all very much for attending, and I hope we found it helpful.